Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond over at the Contrarian Trader. And the symbols that we're going to be discussing today to the long side, CCEP, that is Coca-Cola European Bottling Company. We put on a long trade on those shares on Friday. We'll go over the reasons why in a moment. TLT, the 20-year bond ETF. Also, we're going to be going over the whys we want to buy a bond fund in this current market environment in a few minutes. To the short side, we are looking at Meta, BKR, which is Baker Hughes, and Netflix, NFLX. Now, before we get to the charts, I want to remind everybody today is Sunday. Therefore, we have Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Head on over, click that link below. It'll take you over to this page you're looking at right now. Click that notification bell. Click the like button, even though you haven't seen it yet, but it helps me out with the YouTube algorithm. I would appreciate it. You can always deselect if you hate the show tonight. And of course, subscribe to the channel. All right, so let's get to it. Before we talk about an individual symbol, we want to talk about sentiment. What is our sentiment going into the new trading week? We took a look last week at the S&P 500 closing down miserably for the third consecutive week. The Fibonacci retracement shows us support at 524.61. We did not hit that level. We did not bounce off of it. In all probability, we are going to touch it this coming week. Taking a look at the triple Qs, they have a lot further to fall here, in my opinion. The question is it time? You'll be wondering, why did I just did there? We'll come back to it. Is it time to go shorting the triple Q names? The answer, even though we had a bloodbath of a week last week, is no. Why do I say that? Simple. Click of a button. We bounced off of a support level. So while I remain bearish on this market, I would not be shorting this market into weakness at current. Why? Because we're due for a bounce. Take a look at this downtrend channel. We're at the lower band of it. We're due for a rally, but on that rally, our trading plan going into the new trading week is to lighten up on longs and to load up on shorts. That is the game plan. I already went over this with members on the week ahead commentary. Members, it's posted in the members area. I posted some clips or shorts in and on YouTube and on Twitter. But if you want the full version, become a member, 14 days free. Take advantage of it. Also tonight, we're going to be doing a big announcement of a new offering, a new product offering from the Contrarian Trader. And it's, by and large, free. So, again, please join us 6 p.m. Eastern Standard Time tonight. And our partner that is sponsoring this show at current is TrendSpider. This is the trading software we are using. Automated technical analysis, as you can see here. Click of a button, automated trend lines, and automated Fibonacci retracement levels just with a click of a button. So our stance on this market has gone from being somewhat neutral to now being pretty bearish on the overall market. We did go into last week with short positions on. We did take some of those short profits off the table. So overall, while bullish portfolios took it on the chin, we were hedged with shorts. And we would have been up last week had I not booked some profits early on to the short side. But our short positions kept us even on the week. And that's not bad considering that the S&P 500 fell over 2% and the triple Qs fell over 3%. And if you were long solely of the semiconductor names, you were down over 9% last week. And if you were a member or if you've been on our live streams, I've been warning for a long time now. The yield curve is breaking out. I'm not going to go over that chart. I will be going over it again tonight, 6 p.m. Eastern Standard Time, so please join us there. And again, before we head into the charts we're watching for the new trading week, the link below, click that notify button, click the like, click the subscribe button, and I will chat with you this evening. All right, so let's get to it. So the strategy that we're using is using a scanner on TrendSpider, and if you join up, and I give it away free to our silver and gold level members, if you join up, I will share this scan with you. I will send out a link, and here is the weekly scan. I want to scan the NASDAQ 100 because it's been so weak, and has a lot further to potentially fall relative to the rest of the market. And here you have it. Click of a button. And these stocks here are setting up for either breakouts like CCEP, this is one we'll be talking about, or breakdowns like Palo Alto Networks. It didn't make it onto our list for this commentary, but it does not mean I will not be shorting it this coming week. Take note of the lower high and take note of the fact that you have the Bollinger Bands in red trading down below, or inside, I should say, the Keltner channels in green. So that means you're going to get a powerful move in one direction or the other. Now, if we're trading down below moving averages, in this case, the 20-period moving averages, the probability of a downside move and an aggressive one is very, very likely. If you're trading above, like in the case of CCEP, which we bought last week, the probability of a breakout is very strong. So same scan, but they give us different stocks to trade, either long or short. And these are very, very powerful moves. And one stock we booked profits on last week. And again, before I close this out, I got all these symbols today from this scan that we're going to be going over today, with the exception of TLT, which is a bond fund. So one stock that we booked profits on last week using the same scan was SMG, Scott's Miracle-Gro. I have buddies that are traders, and they laughed at me like I was an old granddad buying a stock that really nobody else was watching. And we bought it back here, I believe, early July. We booked profits way up here. And actually, no, not above 80, right around here. We had about a 79 handle when we booked our profits. So we made a great profit using this strategy. And you could see the Bollinger Bands still remain within the Keltner channels. This, to me, still looks interesting. But given the wick, shadow, topping tail, meaning there's a lot of selling pressure above, I'm not going to look at this to the long side. I'm not going to short it either. But if this market begins to balance out, finds equilibrium between yields and stock prices, well, then we may reconsider it if the setup looks bullish. So again, if you're not currently a member, sign up for your 14-day free trial offer, because you would have received an alert when we got in and when we got out. And I would have told you the why behind the trade. Why are we getting into it? I don't just send out an alert not telling you why we're getting into it. I talk about the trades on our live streams and our market wrap every single evening. Now let's go to the symbols that we're watching for the new trading week. The first up, I already began building a position here, but it's quite possible that I add more. And the reason is that this is Coca-Cola Euro Pack. The yen euro rallied last week versus the US dollar, which dropped like a rock. We're going to talk more about that in a moment. If your eyes are glazing over, don't. It's pretty simple stuff. Stick around. So we broke out last week using the same strategy, Bollinger Band squeeze, Bollinger's in red inside the Keltner channels. A powerful setup, and I believe it's on a daily chart as well. Yes, it is. So you can see that we're trading above the moving averages, the 20-period moving average, on both a weekly and daily time frame. Now, I suspect we're probably going to get a retest of the breakout point early next week at about $74.26. So we're going to be looking to add more to this trade. So in all these symbols, I'm going to be putting in the members area and in our Slack forum price targets, entry points, stop loss points. So you can see CCEP, long consolidation. The longer the consolidation, the greater the validation of any breakout. And you're seeing that breakout now. So a powerful setup on not just a weekly chart, but also validated on the daily chart, in which we broke out on Friday on a down day of 2.5% on the triple Qs. Think about the relative strength here. And look at the volume. We had volume. And when you click the automated trend line button, you could see that we broke out and above daily resistance. And we can overlay on here. I haven't looked at this yet. Now, on this daily chart, TrendSpider has the functionality. And if I didn't mention, you get a 35% discount code below if you want to sign up for their 7-day free trial offer. And again, I give it away free to our silver and gold level members. On this daily chart, I can select or opt to have weekly support and resistance levels overlaid, and I'll click the button now. Boom. And they will be reflected in dashed line And you can see that our price target is in this range up here. And I will identify a number that I like and document it in the members area. You can see that stochastics are rising. That is a measure of momentum. Momentum is building to the upside. CCEP bullish. Now, the next symbol is going to be the TLT. Now, you can see that the TLT had, past tense, had Bollinger Bands inside the Keltner channels, and they fired off, massively. Now, you may be saying, oh, it looks as though the horse has left the barn here. Why do you want to go buying this now? In reality, to be honest with you, I do not. I would rather wait for a pullback, which I think we're going to get this week. But the macro picture is a bit different. We want to keep an open mind because we think that TLT is going a lot higher. Even though the TLT is in a secular bear market, I'm predicting that we're going to see a cyclical bull market, which has already begun. And the reason why it remains on our watch list is that we're not just focused on a daily chart. That's short-term trading. We're looking at a more macro view, and that's the weekly chart. And you can see the Bollinger Bands are still within the Keltner channels. So there's a tremendous amount of energy that is getting ready to fire off to the upside. And it began last week. So if I'm sounding overly bullish on the TLT, there's a reason for it. But I would caution against buying it right here, right now. Let's go back to that daily chart for a moment. Daily chart. Let's click the automated trend lines. And you can see that while we broke out above one resistance level, we have resistance above as well at 98.92. So we don't want to go buying into a resistance level. That's not what we do here. We want to see a retracement. We want to see a retest of support. And then we want to begin bull operations on the TLT by building a position incrementally. That way, if we're wrong small. And after we build a position, if we're right, well, then we're right big. Now, I'm going to go over tonight the historical performance of bonds, the TLT, relative to a uninverting yield curve, which is what we're seeing right here, right now. And I've been warning about this. Go to my past live streams every Sunday night, every Thursday night for weeks now, if not months. So if folks believe that this stock market sell-off is over, they're wrong. Very, very wrong. It's only just begun. So again, as a reminder, TLT, I'll be putting a price target, entry point, and stop loss point in the members area and in the Slack channel. And another reason why we don't want to buy it, we're trading above both the upper band of the Keltners and the Bollinger Bands. So it's a little bit extended. So let's wait for that pullback. Now to the bear camp. The bear camp are very familiar names. Meta, they reported last week they had good earnings. We really don't care all that much about the daily chart. We're looking at the weekly chart. Now, the weekly chart is not horrific. In fact, it showed relative strength last week by being able to close up in a down market. But that's only because of their earnings. And to be fair, we were able to recapture two support levels, one in black, let's change that to white, and one in green. Technically, the one in green we just closed right at. So to me, this is not a screaming short at the open on Monday morning. I need to see a break below these support levels. And if I don't get it fairly soon, I may not just short the common stock or buy a put spread. I may just sell a call spread. Basically, what that is that you sell an out of the money call, and then simultaneously you buy a deeper out of the money call as an insurance policy. Plus, it helps reduce the buying power reduction in your brokerage account so you can do other things. Because theoretically, if you sell a naked call, you have unlimited loss potential. So if you buy that call, that gives you a defined risk trade. Therefore, it reduces the buying power reduction, and it also acts as an insurance policy just in case you're wrong. So that's certainly a strategy here. And if we do fail to hold these support levels, then we could look to build a put position. So again, this is not a screaming short at the open on Monday morning. Please do not do that. You need to get it validated. Members will be entering our price targets, entry points, stop loss points, and price targets in the Slack and members area. The next chart up is Baker Hughes. So we have a stock market right now that is worried about recession. If they're worried about recession, you don't need oil. If you don't need oil, you don't need Baker Hughes. You don't need energy, oil, equipment, and services. That's their sector. So you could see that after the jobs data was released on Friday, these shares were absolutely annihilated. Now, looking at a weekly chart for the macro view, what we're looking for here is a break of support, and that'll have us shorting Baker Hughes. So here's your rising uptrend channel. You don't want to short this yet. You want to wait for the break of support. Now, as a reminder, the Bollinger Bands are trading within the Keltner channels. This initially fired off as a bull setup. This could still turn bearish very, very quickly. So would I short the common stock on Monday morning? No, I would not. Same deal here as with Meta. We need to see a validation of a breakdown, and that would be a closure below this lower band of support weekly time frame. While we wait, we can always sell a call spread, as I mentioned on Meta. That's the sale of an out-of-the-money call option, the purchase of a deeper out-of-the-money call option. And that puts you short, and you take advantage of the high volatility that the market is giving us. They're paying us big premiums now to sell these options. So we take advantage of the implied volatility. We also take advantage of time decay. Now, the last chart I'm going to go over here is Netflix. Netflix earnings were pretty bad. And this is probably one of my favorites to short because they reported poor earnings. You didn't get much of a reaction in terms of price action to the downside on that earnings report. So I think there's a lag effect here. It's beginning to play catch up now. And Netflix is not a cheap stock. It's sporting a PE of 38 relative to Meta, which is trading a PE of 25, which is still somewhat expensive, but you have still good growth rates here. So you can't knock these companies. The however is they're simply out of favor, and we want to take advantage of it. So weekly chart, we've had 3 consecutive down weeks on Netflix. So we want to take out our crayon and draw some line. Now, looking at this chart right here, right now, would I be a shorter of Netflix stock on Monday morning? No. The market got killed Thursday and Friday. We're due for a relief rally here. So this is going to be an opportunity, not an opportunity to buy stocks for the long term. It's going to be an opportunity to raise capital and to build on short position. I'm going to go over the whys tonight again, 6 p.m. Eastern Standard Time, why we believe that this market is going measurably lower. So we bounced off the lower band of support last week. We don't want to short into that. We want to short into a resistance level. Let's go to a daily chart. It's not out of the realm of possibility we proceed lower down to around 596 on Monday. But there's not enough reward to put a short trade on the table for such thin margins. I would rather short into resistance and then cover at support. Now here's a monthly view. We can see how overbought we are on stochastics. They are now correcting. And the one thing to remember when you're doing a short trade, remember that shorting stocks is far more complex, far more risky than it is to buy a stock. So we always want to put things into context. Netflix is not a garbage stock. It's to be respected. This is its revenue growth. It continues to rise. Q2 saw a rise of 16.8%. It's just that it disappointed the street. So it's a monster corporation, but at current, the path of least resistance for the shares is to the downside. And before we leave, I want to take you over to a multi-symbol view of where, or why I should say, we want to allocate capital to bonds rather than cash. Now you can see here, over here, I have the UUP, which is a dollar bull ETF, and the TLT. Now look at the performance of each of them. The dollar went one way, which was down, and the TLT went up. So while we want to raise capital, we do not want to sit in cash. Why? I'll be going over tonight the yen and euro. They are breaking out and breaking out massively relative to the US dollar, and I've warned about this. So I would rather park my capital, at least a good portion of it, into the TLT until such time as the sell-off in the equity markets are over, and I'll have more capital to buy stocks on the cheap than I would were I sitting in a declining US dollar. So join us tonight, 6 p.m. Eastern Standard Time. Again, members, all of these symbols will be posted in the Slack forum and in the watch list page with price targets, stop points, and entry points. And if you enjoyed TrendSpider, you should. It's an awesome, awesome product. If you don't have it, it's like you're an archer and you're missing an arrow in your quiver. If your business is a trader and this is a business, Your competitors are using this technology. So I give it away free to our silver and gold level members. Click the link below if you want to join up for our 14-day free trial offer. If you're not ready, that's fine. Just subscribe to the channel. I get you a 35% discount code by using the link below and take advantage of their 7-day free trial offer to TrendSpider. Folks, I'll talk to you tonight, 6 p.m. Eastern Standard Time. Till then, have an awesome Sunday.